All right, SPY ETF, stock market update, weekend update. So if you guys want to see it more often than that, you should comment. So fake out, and we did blow out back to all-time highs, 510. That was the highest print on SPY ETF on Friday, and it was a short week. And you can see on my chart right here that the volume for this week, anything above 60 million is a little above average, but anything within that 65 million, that's an average volume. That is pretty low volume if you take a look at the other spikes that we had, where market basically usually is volatile. So this is the time of the year we are approaching where volatility will increase. We had a short week, and here's what I'm watching. So if we take a look at the 1 week, one day, Friday performance, you can see where the money was going, even though overall market was muted that day on Friday. Let's take a look at the SPY on an hourly chart. You can see in the morning we did have a little bit of we did gap to start the day, but ever since, market basically chopped up everything, burned a lot of premium. And if we take a look at the weekly and the daily performance, industrial, utilities, basic material, healthcare, financials had an inflow, energy, consumer cyclical, technology, real estate slightly declined. But you can see the theme for the week. A lot of money went to consumer defensive stocks, healthcare stocks, financial stocks. And we're going to take a look at the sectors individually before we dive into SPY. What I'm going to be watching in this, we have to take a look at the sectors. So utilities, let's switch to daily chart, still has a room to go up. Money can flow into it. Industry, biotech has been doing very well. It can go little higher. It's not overextended, but builders, I think, could be a little bit overextended. Transportation, overextended. Financials, overextended. Healthcare, overextended. Real estate, tech, maybe chopping around maybe here, or it can roll over. Real estate, money can flow, but it's not overextended. Consumer staples, I think, right? Communication services, money was flowing into, but it's not overextended. It can still go higher. And also, let's take a look at this. Consumer discretionary, which I saw a lot of flows into stocks such as Starbucks, Nike, Home Depot, Amazon especially. So in a discretionary, basically, sector of Sp500, consumer discretionary ETF, you can see the top holdings: Amazon, Tesla, Home Depot, McDonald's, Booking, Lowe's, Nike, TJ Maxx, Starbucks, Chipotle, Airbnb, O'Reilly, Marriott Hotel, GM, Lulu, Ross Stores, AutoZone, Ford. I mean, you can go through this list yourself and see how those charts are looking. Are they overextended? Can money flow into it? But I think I saw at least Starbucks. I saw at least Amazon. Not much Tesla. But I saw flows going in there. So if we're going to see a rotation, basically money come out of the tech and go, because NVIDIA reported earnings, everybody knows, blow off top maybe. Do you think that it's going to go higher? Probably, but it's very, very overextended. You see a lot of people who played it both ways. Premiums were very, very expensive. Implied volatility was very high, and not that many people got paid crazy unless you bought deep in the money. Especially if you bought outside of the money, you lost money. But IV chilling right now, at least for the next 2-3 weeks. But you can see further out you go, I mean, it's still implying pretty big move. And daily average true range for NVIDIA is pretty high. So let's jump into SPY. So in SPY, if you think that it has a room to go. Well, risk reward is not on your side, because we just looked at the sectors and you see the biggest contributors in S&P 500. Like if you just go to, if you're using SPX, you know it's a market cap weighted index. Okay, the bigger market cap it has, the more it can contribute to the price of SPY. Just like look at these are the sectors. Okay, information technology, 29% of S&P's weighting. Okay, that's how much it can, influence the ETF at all. So healthcare 12%, financials 11%, consumer discretionary 10.5%, communication services 9%. You get the point. So if you think that Microsoft overextended, Apple, Nvidia, these are in technology sector, these are the three biggest stocks. Look, Nvidia. Nvidia was somewhere here at top 10, but it's top 3 right now. 4.5%. It represents 4.5% of S&P 500 entire market capitalization. I don't know, S&P 500, what is it right now? Market capitalization, 30 trillion, whatever. But Nvidia alone is hitting almost 2 trillion at some point, right? 1.6, 1.7. What is it right now? But not the point, but you get it, what I'm saying. So if you think that SPY is going to go higher, you have to be very bullish tech sector. And also, if you think that it needs to come down, I'm watching the support of a very recent breakout, 503. Okay, this is the resistance level I'm watching that we broke out, we gapped. We did have a huge day, actually 3% day, I believe, in S&P. In Nasdaq 3%, in S&P 2.7, 2.6%. Pretty big move, pretty big gap. 100% of the time in S&P 500, gaps get filled. So this gray line right here, 5-day moving average, it will act as a support if we slip below 503. And below that, you can see this blue line, which represents 20-day simple moving average. And you can see it's basically trend, right? Currently, if you are betting against the trend, if you're contrarian, you have to think that, well, if you're very, very bearish and you want to basically capture 3, 4, 5% move in stock market, or maybe even 10% move downside, 20-day moving average has to break, okay? And if it does, we have a next support level at 50-day moving average, which is 483. And below that, way down there, 450, we have a 200-day moving average. In case we have a credit event or something like this, something breaks and market volatility increases, just like we did last year in March, where basically market went crazy. Somewhere around here where SIVB happened, so and some banks went out of business, got acquired. So unless that happens, we're not testing 200-day moving average. A lot of people at this moment trying to look at 20-day. You can see since the beginning of the year, 20-day has been support. But if it comes down to 50-day, you can be sure that many people will try to buy the dip. So these are the levels I'm watching for SPY. I don't want to make it too long. I had many more to share, but I don't like to go too deep, especially I don't want to make it too long. 10 minutes, I think it's fair enough. Fed, 24 days until FOMC. We still have time. I wanted to show the stocks that are above 50-day moving average in NASDAQ, S&P 500. We'll talk about it maybe on Monday after market close, and we'll talk about the put to call ratio. But that's the video. If you want these updates every single day, just let me know. We'll keep talking about it every single day. Thanks for watching. See you in the next one.